आ जाएगा, so you will start seeing. Let me know once I'm live में. चलिए, can we start now? So today's topic is EPS. ठीक है? Is it visible? Go to the live section. You will see whether I'm visible or not. Okay, so this is from your CFA level 1 topic, and this is a topic that will inspire you, bother you, and you will. This is something that will always be around you. You will not be able to escape the topic. What is the name of the topic? पहले वो समझ लेते हैं. The name of the topic is क्या है बताइए, है ना? Do you know what is the topic? It is EPS, है ना? And what is the meaning of this one? This is earnings per share. So how do you calculate earnings per share? Can someone tell me? How do you calculate earning per share? Amount available to equity shareholders. So what is the amount available to equity shareholders? Amount available for to equity shareholders. That's absolutely correct. Equity shareholders. Okay. And what is the amount available to them? This is nothing but your PAT. And for compliance sake, we will be looking at the older data. We'll not look at the recent data. So here we go. Okay. So what we'll do is we'll hide some of the data. Just 1 second. So I will do a replay setting. Are we on a weekly time frame? Yes. And is this a edit thing? Start new. Which time frame is this one? Let's start new. So this is October 25th. Yeah. ठीक है. चलिए, let's focus on it, है ना? Let's not lose track of it, what we're teaching. So the point is, how do you calculate EPS, है ना? So one we have understood, which is rightly answered by Naveen ji, that this is amount available to the shareholders. What is that amount? That amount is nothing but your profit after tax, or it is nothing but your also known as net income in the West, also known as, this is the East terminology. In the eastern part of the world, they call it PAT. If you go to West, they will call it net income, or they will call it earnings. Okay. And when you divided the earnings by the number of shares, where do you find the number of shares? That's a question that we will ask. So let us go to this site, which is known as, one of the, there are multiple ways to figure out the number of sites, number of shareholders, number of shares, not shareholders. There are multiple ways. Now, if I'm looking at a company called UPL, okay, and please understand, this is not a buy or sell recommendation. This is only from the pair of data science. So fundamental analysis is nothing but the data science. So if you look at from the investor's perspective, this is the number of shareholders that we're talking about. So where do you find? You should have, मतलब कई लोगों को पता ही नहीं होता कि number of shares कहाँ से ढूंढ. Where do we find the number of shares? So this is the number of shares, number of shareholders. Do you see that? Yes or no? But unfortunately, this is number of shareholders. It does not tell you the number of shares which is owned, because one shareholder could have 5 shares, correct? The other guy could have 10 shares. So this does not tell us the number of shares. Then the question arises that where do we find the number of shares that a company has issued? You will find it many places, but for CFA participants or aspirants, participants nahi, aspirants, one way to, and just relax, whatever you gather, especially for people who are from data science, जो भी आपको जितना समझ में आता है आराम से सुनिए. Even if you get 5% of it, this will change your life. Why? Not because you have to appear for CFA, just because finance is a knowledge that you require across for your management, from your own management perspective. Okay? Now, the second way to figure this out is do you see this one, earnings? दिख रहा आपको? देखा? है ना? So let us click on this earnings thing. If you click on the earnings thing, ensure that this is not there. हाँ, आपने जैसे ही क्लिक किया and double इस पे क्लिक कीजिए, make it a full screen. You have more UPL earnings. I hope you see that. कर दिया आपने? More UPL earnings कर दिया आपने? And then what happens is you come to, there are various pieces of information available here. One is overview, which gives you this. Then it is about statements, financial statements, statistics, dividends, earnings, and revenue. So we will go to this component. Okay, let me show you one by one. गौर से देखिएगा, है ना? Look at it carefully. So if you click here, है ना? If you click here, this tells you about the business. Okay, the capital structure, how much is debt, how much is market cap, minority interest, cash equivalent. We will talk about minority interest one day. This is an important part of your learning process. What is minority interest? This is capital structure. So when we are doing capital structure, that we will cover. So write down somewhere that we have to, these are the things we have to cover. So capital structure will cover separately. This is who owns it, free float. What is the meaning of free float? So that will cover in capital structure. Then there is revenue, profitability, etc., etc. They have plotted it here. Revenue breakdown. Then these are the statements, which is the P&L statement, income statement, balance sheet, and cash flow. So that is one. Then they have statistics. So I am more interested in calculating the earning per share, and this platform tells me the number of shares, total outstanding shares. Correct? So the one is authorized. How many shares can you issue? What is this number? This is 79.6 and it changes here. This is 796. Say for example, I am talking about this piece of data. Easier to read because the camera can also see and you can also see. So say for example, I am talking about this point. This is 79.656 crore. So when you have to put a crore, just put a dot here. So 3 digit, just put a digit on the, if it is a 3 digit, remove one number. If it is 1 digit, then so if this is 796 crore, so it become 0.7 crores. If it is 7966 millions, it will become 796.6 crore. So you know how to quickly convert between million and crores. So when it is 70, because a lot of Indians have difficulty converting this, so this becomes 79.656 crore shares are there as of 21. Obviously, you are interested in the recent piece of data because from calculation perspective, this is history. So now you have the net profit from here. The net profit from here, which is the income statement. You have the net profit, which is also known as I told you, in the West, in the US, they will either call it net income or they will call it earnings. In India, people get confused. Students, especially the participants, CA participants, CFA aspirants, they have a lot of confusion. Kabhi net income bolte, kabhi this is after profit after tax. Sometimes they call it earnings, sometimes they call it net income. This is nothing but your also known as bottom line. So all these are similar terminology. If you go on to CNBC Z News, you will hear people call it bottom line because this is the last line in the profit and loss statement. This is profit after tax, also known as net profit. These are Indian terminologies, or maybe in the Commonwealth they use it. But if you go to the West, they will use it earnings or net income. Net for net profit or net income. ठीक है, समझ गया? And here is the proof they are using it net income. Now once you have the net income, okay, anything that you have paid to the preference shareholders. Preference shareholders are not your ordinary shareholders. They have a preference, they get a preferred dividend, there is a fixed dividend, and they do not have voting rights. We will talk about it. When we talk about capital structure, we will talk in detail. So, net income minus the preference dividend to preference shareholders. Any dividend paid to anyone else, any class of share other than the equity shareholders. So, this is net income divided by the number of shares that have been issued. How many types of shares are there? One is authorized. So authorized means total permission. Maybe you had permission to issue 1000 million, meaning 100 crores. Okay, out of which you have issued maybe 800 crores, 800 million, sorry, which is 80 crores, out of which maybe 796 something million, that means 79.6 crore shares have been subscribed. Correct? The balance is there, they have been issued but not subscribed. And you also understand from your accounting statement or accounting training that shares which have been issued and not subscribed, after some point in time, it will be forfeited. Called back, they'll be written off because you not paid the full money. Someone has spent 10%, someone has paid 20%. At this stage, when it is fully subscribed, means you have to pay the full outstanding dues. Say the share price is 100 rupees, you'll have to pay 100 rupees, but someone has paid 50 rupees, someone has paid 10 rupees. Those will be forfeited. You understand? So this is authorized. Total it can issue in the lifetime. Can this be changed? Yes, it can be changed. So you have to go to the ROC, registrar of companies, and tell them that I would like to change the total number of shares that I can issue in my lifetime. So authorized can also be changed. This is the authority that you have, correct? This is how much has been you have issued, and this is what have been fully subscribed. So the balance, what has happened to the balance? The balance, maybe you have not collected the amount and maybe you have forfeited that, maybe. Understood? So this number of shares that you see here, what is that number of shares? When you come here to the statement, it says these are the shares which have been issued. Here, check it out one more time. So if you go here, oops, if you go here, if you go to the statistics, what is the terminology that they use? It says number of shares holders, number of shares outstanding. These are the shares that have been subscribed to, fully paid. So how many shares you have got now? 84.417 crores. It is 844 million, but this is what it is. Clear? So now you know where to get the EPS from. How to calculate the EPS? It is nothing but your net profit minus any preference shares, dividend to preference shareholders, dividend to pref shares, correct? Do you agree? Yes or no? And divided by the number of shares, not shareholders. Number of shares and shareholders are different. This is the number of shares. The total number of shareholders is something. Clear now? This is the number of shareholders, but I am not bothered about the number of shareholders. I am bothered about the number of shares. That's how you calculate. Now that is what they teach. It is absolutely fine up till this point. But we don't stop here. Okay. The journey starts now. That is only about the methodology. That is only about the calculation part of it. But that's not my cause of concern. My main training is focused around something which is this one. Look at this. ये क्या है आपका? What is this E here? Okay. What is this E? This is earnings. So all your corporate actions are plotted here. Consider this as x-axis. Okay. This is your x-axis, and consider this as y-axis. On y-axis, you have dependent factors, which is the price, which is a dependent on x. There are a couple of things on which it is dependent. At the bottom, this is the price, correct? Do you agree? This is price. Hai na? And for compliance perspective, we are looking at older prices, 2025. We are not looking at, we are not supposed to look at the past 1 month of data, especially in a public domain where we are teaching. Hai na? That's a compliance from SEBI. So we are looking at the past data. On x-axis, you have, this is known as volume. This is what is the sum total of buy and sell. When you buy and sell, this triggers a price action. Either the stock moves up or the stock goes down. The sum total of buy and sell is known as volume. This is also known as total traded quantity. It is not a buy volume. It is not a sell volume. This is what? This bar that you see here is the sum total of buy and sell, which is buy plus sell, which is total traded quantity. Is that clear? Yes or no? Have you understood? So on the x-axis, one trigger point, which has an impact on the prices, is volume. What are the other factors which impact? Because we are not studying here volume. Today's topic is not volume. Today's topic is not technical analysis. Today's topic is EPS. So I am bothered about this one. All my corporate actions, so earnings have an impact on the stock prices. If you have good earnings, the stock prices may go up. If you have bad earnings, possibly the stock will go down sooner or later. Then you also have split here. Split shares. It was these many shares, you split it into 4 parts. That's a split. है ना? So you can have a, it's not a split, it's split. So all your corporate actions are listed on this platform. Understood? All your corporate actions are listed where? On the x-axis. Okay? So now you understood what is the meaning of E, what is x-axis, what is y-axis, and what is this. So will this impact your stock prices? Yes or no? So is it our right, and is it in our interest to know more about these? Yes or no? Yes, it is absolutely. Why? Because the price is born out of. How is price born out of this one? Because from the earnings, this is your net profit. This is what? Net profit. From net profit, when you remove other, maybe the preference dividend, when you remove it, what remains is the earnings, and let's call it total earnings for now, because it is not earning per share, it is the sum total summation of all the earnings. So let's call it earnings. Okay, so let's call it total earnings, right? From the earnings, now you will pay. Again, there could be two components. One component would be, let me make it a little smaller here, so one component would be, okay, maybe this is retained earnings. Retained earnings goes where? It gets added to the reserves. It remains within the company. And this portion is something that you have distributed as dividends, correct? And the dividend is used in the DCF model to value the company, and the value of the company is here. That's the market price. When you want to calculate the market value or the book value or the fair value of the shares, it is coming from where? It is coming from nothing but from not any other place but your earnings also. Do you agree? Yes or no? Total earnings, you will have two components. Retained earnings, you retained one, and then you give us dividends. Dividends is the cash flow to the equity holders. When you sum total it, it becomes total earnings, which is nothing but your net profit minus preference dividend, if any. If there is no preference dividend, then net profit is equal to total earnings. Total earnings where you will retain some portion. Maybe you retain 60% of the net income or the total earnings, and 40% maybe you distribute as dividend. 40% of your net profit minus preference dividend. The balance, so this dividend is used in your financial modeling. Do you agree? The DCF means what? Discounted cash flow models. So what are you discounting? Discounted cash flow models. The question is, what are you discounting? Any type of cash flow in the company you're discounting. It could be dividend, okay, that you could be discounting. It could be FCFE, free cash flow to the equity. It could be FCFF, that you could be discounting. So come back to dividends. This earning has a component, two components, retained earning and dividends. And dividend, you calculate the discounted cash flow using the dividend methodology, using the Gordon growth model that you understood. That means that particular cash flow to the shareholder, using that you calculate what? You are calculating the fair value of the stock. And what you have listed here is the market price of the stock. Do you agree? Yes or no? That means if the fair value goes down because the dividend is going down, the company is not doing good, because the earnings is not good, the fair value of the company will go down, and hence the market value will also. Sooner or later, it may not happen on a day-to-day basis, but sooner or later, if the earning goes down, the fair value of the company will go down, and hence the market price will also. That is why I say that this has an impact on this, because this is used to calculate your fair value from a concept which is known as dividend. Dividend is paid from the earnings. Now it is clear, the linkages are clear. Okay. Now let us understand this one, then I'll take your questions in the end. Okay? Let me click here and what is listed here, and then comes the new layer. So there are 4-5 layers to earnings which they are not teaching in the books, unfortunately. What are those layers? Those layers are hidden there. So if I just double click, you will see all these. So I will just first double click here because I want you to first learn what they teach in the basic stuff. Okay. Dividend splits, bonuses is not listed here. Earnings is these are corporate action automatic, and then there are a lot of corporate action, but this is what has an impact on this one. See, every action is a corporate action. Any announcement is corporate, but when you say corporate action, it is largely different. So you will have one tab which will say corporate action. So what do you expect when you're going to click on the tab? What do you expect to see on any website? Those are corporate actions, but not of a regular nature. But these are of regular nature. Earnings, bonus, splits. These are the corporate actions, and then every action. But as far as some visibility is there, M&A you would not be doing always. Maybe once in a 5 year, once in a 10 year. But these are happening regularly. Split is also not regular. Bonus is also not regular. But earnings is a frequent every 3 month feature for a listed company, especially for a listed company. You have studied dividend policy as to why dividend needs to be declared. That we had recorded earlier. That is there. Now let's click on this one, which is important. This is very important. This is where the maths. So far we were learning about the maths, that formula, net profit minus days. That is not money. That is not investment. That is not strategy. That is not portfolio management. That is maths. But now when you start looking at this, then you move from a accounting class to portfolio management class or a corporate finance class. So you shift when you are doing all that earnings calculation or dividend calculation, maybe see you are doing only the earnings calculation. So when you are doing this calculation, purely this calculation, you are sitting in which class? Accounting class. The moment you shift to this, then you shift to which class? It is corporate finance, especially this one, corporate finance. Why corporate finance? Because your valuation game starts, the tracking starts. This has impact on other departments also. This will have an impact on the sales department. This has impact on the finance or the corporate finance. Whatever is done at the headquarter level, that is known as corporate finance. All your capital allocation, fundraising, interest, depreciation, taxation, amortization, those are there. Corporate finance, especially the valuation part of it. So now if you look at this, read it carefully. This is Friday, released Fridays the 2nd, August 24th. The reported is -5. Do you notice that? Yes or no? It is a negative number. Do you notice? Yes or no? It's a negative number. So they posted losses. Do you agree? That is what the data says. It is not speculative in nature. This is what the data says. Estimated was just half of it, roughly, odd number. Who had estimated? The analysts had estimated that there should be just about 3, -3. And how much they have posted? This is like 60% more, 1.6, maybe more, maybe more than, not double, but just under double. It has posted about 5.7. So has it posted more loss? Yes or no? Point number one. Second is, has the analyst gone wrong? Yes or no? The analyst has gone significantly wrong in his estimate. The gap in his estimate and between the actual number is percentage times is how much it is? That's a significant miss, and this is known as, what do they will call on TV channels? They will, on CNBC they will call it. It is not a happy scenario. Brings a lot of pressure on everyone because the company is for making money. It is not for social work. It is for profit. So this brings a lot of pressure. Maybe some people will get fired also, not in this company, but some other company. So this is a challenge. Now, first thing first, as an analyst, what you would do? You would analyze why this happened. Ah. So there was this famous song, why this collaborative, you will go and investigate why this happened. If you, because people just read, Naveen is so happy today. So people just read this as a number. You have to feel this number, not just read it. There is a difference. You will leave no stone unturned to see, to check and estimate or understand rather why this turned negative, until unless you are able to pinpoint on a single one or two factors. So we were able to figure out this happened. Acha, before you ask this question that why this has happened, you also have to see how many times this has happened. So if you scroll to the right, you'll see that it has missed the estimate not once, not twice, but maybe 7, 8 times in a row. How do you know that the stock is under pressure? See, this impacts that. Now I'm asking the reverse question. I said X impacts Y axis. Now I'm asking, how do you know that Y gets impacted by this one? Is first ask, how many observations? Now we are in the statistics class. Listen to it carefully. How many observations have you taken? 9 so far. Out of 9, how many are misses? So if you just remove this one, this is 8 by 9. And how much is this one? Almost like 90%. Almost like 90%. So in 90% of the cases, the company has missed the estimate. Second question is the analyst fooled? Because he's the same analyst who's been predicting here. Does he not know the business? Does he not understand? He's a new guy on the block. No. There is something. So there are two factors why a company would miss the EPS. First of all, you check how many times. So what you are checking is the probability of miss is 90% here. Okay? Now this, either the analyst is wrong, but the analyst would have been fired because this data comes from a company called FactSet. So analyst cannot be wrong 8 quarters. He will lose his livelihood. That's not possible. So then you ask two questions. Is it because of an external factor or is it because of an internal factor? Why there is an EPS miss? What is the magnitude of the EPS miss? So let's go and identify the magnitude before you answer this question. Whether it is internal or external, check this out. 2.75% miss. Very close. 6.8. The magnitude increases. The gap is widening. 50%. The gap widens further. This one. 46%. Almost close. 50%. 144%. The gap keeps widening between the estimate. Now in this case, both are dipping down. Both is going down, but the gap is significant. This is the actual earnings posted. Do you agree? Yes or no? And this is the estimate. The gap keeps widening. There is a divergence not of RSI. The most bogus divergence that ever technical teacher trains, and I have written a paper and also submitted. Okay, the divergence in EPS estimate is dangerous, and that too when it lasts for 90% of the times of the observation that is that you are observing or that is under observation. So divergence in EPS, you will go and you will not proceed beyond this point. You will not pick up any other topic. You will not pick up any other financial topic until unless you have solved this maths as to why this is not functioning. And we come back to our basic question. The question at hand is it because of external factor or is it because of internal? So if you read the call transcripts, both are answered by call transcripts. Where will you find the call transcripts? There are multiple places on the website also, or you can go here, and you can find the call transcripts. These are the call transcripts. ठीक है? Noticed? है ना? समझ गए आप? So when you notice that, so come back to this one. This is one trend line also you can find out, but this is the easiest way. Stockage also has it. So external factor of EPS miss versus internal, is it beyond their control? So this is in economics and fundamental analysis class, this is defined as supply side issue. Now I am linking this class to your procurement class, to your supply chain class, to your supply chain strategy class. I am linking this topic to something known as fundamental analysis on the raw material side. So it's a supply chain issue. So is this a supply side issue? It's a strategy. Then the strategy has gone wrong. The procurement, this thing has gone wrong. Or is it a demand side issue? People are not asking for it. The product is not required. Hence, you start posting loss. Or there could be then other factors like HR issues. The people are not efficient, machines are not efficient. But broadly, you can classify the earnings related issue into two factors. One is internal. First, I will have doubts. Internally, there is some problem, or there is external factor. In this case, it was China was the issue. The China is the real issue, because all this chemical material, the chemical material or agrochemical comes from where? It comes from China. And there, if you look at the inflation cost, the supply cost has shot up significantly. So whatever you are getting from abroad, it's an issue. So it's a raw material issue, which you can go and investigate. I'm not sure whether you will be able to find out now, but there is always, this you can always go and check if raw material is an issue, and which looks like if you go to the quarterly statements and if you check the statements, see the variability in the cost, and they are trying to control. It had at one point in time, it had shot up to, and the average was maybe here, maybe here. It has stabilized. This is 50%. How to read these numbers? So these are anomalies. Okay? These are anomalies that you see. These are stable at 50%. These have stabilized as 50%. So this is an anomaly. Okay? Understood? So this is abnormality which impacted the price. Apart from this, once you figured out the internal versus the external factor, okay, once you figured out, you would also conduct a primary survey, because this is very important. Why this is important is, and because you are under exam pressure and all, people are not bothered about investigating. They just teach EPS, few pages, you will pick up and the matter is gone. But this is not such a simple issue. Once you realize that this is, in both cases, you will run a primary survey. This is an external issue, so you will speak to some agrochemical specialist, some sector specialist, that what is the issue and when this could possibly go away. So when we did the survey, we realized, when we spoke to our students, we realized that only in, I think they spoke about January 2025, they expected the raw material prices to ease. Understood, no? They expected the raw material prices to ease. And if you go and investigate here, and I'm using the word investigation, see when the stock prices start picking up. This is 2024. Okay. Look at this one. So the stock prices start performing only this one. It is stuck in this range for some while. It shoots up. So maybe in the second half of 2024, if you notice this carefully, and the second wave of, see, it consolidates here, it consolidates here, it consolidates here, it consolidates. There are 3-4 phases, and I think only in 2025, after consolidating, then the stock prices. So what we were told initially during one of our discussions with these sector experts, it was not wrong. So then we said, wow, this is a beautiful methodology. Go and look at the raw material prices, structure your thought process. EPS problem, internal or external. External, go and speak to some guy, because reading books and these research reports may not. You need your own conviction, and once you have built your own conviction, then you would do this. So once we figured out, okay, this is the issue, So we started waiting for the, so you will see that this gap which you're seeing, the divergence which was happening on the negative side of it, it starts ballooning, and slowly you would notice that this starts compressing. Now the factors are working in favor, so we understand, okay, and then it will give you surprises. Blips will be there, 900%. You know that this is not sustainable. This is just momentary, and then it gives another surprise. It's a huge variation. Now, what is the problem when you have this kind of EPS? Now, this is from your DCF class. This is from your corporate finance class. If you notice the such volatile earning per share, one, it is negative dividend earnings. Can you confirm that fact? It's all negative, and second is it is too volatile. Even if it is positive, it goes up by 1200%, like you see here. The challenge that will come out of this one is you cannot use dividend in the DCF model for valuation purposes when your dividend is that volatile. Understood? Now let's go and check this out. So double click and I will pull out this one. Now first let's check the basic EPS, which is this one. And let me squeeze in more data here. Oops, can I squeeze in more data? So the second part of the training is looking at the trends. What do? The trend analysis. Okay. And some data is hidden. For training purposes, we have hidden the recent data. You don't see data beyond this, I think. So look at this one. When it is going down, just hold. No decision to be taken. This is from your portfolio management class. When it starts picking up, you will go and again check, is this sustainable or not? Whether the recovery that you're seeing, whether it will bounce back or not, and what factors lead to this bounce back. So with every uptick, with more intensity, with more curiosity, with more eagerness, you will go and investigate. I'm using the word investigate. Don't wait for others, and there are AI tools. Just go and pull out the transcript and figure out why the earnings, why the company has started posted positive returns. Earnings one, and second, if it is positive earnings, or if it was already posted positive earnings, then why it is going up. So you do a trend analysis, not in the stock price, but in the EPS. So no one on the planet, I don't know if anyone is teaching or not. I've not seen a book. I've not seen my professors do that. I wish we were taught the way I am teaching you guys. EPS trend analysis, my life would have become simpler 20 years ago had someone told us. Simply plot it, and there is a direct correlation. So if you plot this, one, and go back to the main chart, which is this one, you would notice, I know there's a lot of data, but let me make your life simpler. Look at this one. This data is compressed, and this is same thing, this is our own indicator. Look at this one. There is a direct correlation or a direct correlation between stock price and EPS. And the whole world, the bookish knowledge, the best of the certifications, and let me not name those certifications, they are teaching that EPS is bogus, which is absolutely not the case. They will say, look at EBITDA margins, they look at this, don't look at EPS. EPS mein there is a lot of window dressing done. EPS mein you have treatments, window dressing, accounting adjustments done at the headquarter level. That is all crap. Why EPS is required is, if you are looking at EBITDA margins, for example, okay, EPS means net profit less of dividend, correct? Do you agree, yes or no? Remove the dividend and divide it by number of shares. If you don't remove, this becomes total earnings. Okay? So why EBITDA and why not total earnings, or why total earnings, why not EBITDA is, see, this is good for comparing companies of two different scales. One is this size, the other one is this size. You cannot ideally compare. There is efficiency, that kicks in. Efficiency in capital allocation, efficiency in fundraising. They will get funds cheaper, they will get funds expensive, they have a lot of access to the funds, they have less access to funds. So when you are comparing two companies purely on cost, um, purely on the operational size, which is on the cost structure, then you will use EBITDA margin. You want to compare two companies, one is 100 crore, the other one is 1000 crore. Their cost structures more or less would remain the same, more or less. If it is a 10 crore company and a 1000 crore company, I agree the cost structure will differ. But if it's a 500 crore versus a 2500 crore, the cost structures will not differ significantly, then you should use EBITDA. However, if the companies are of same scale, more or less the same nature, then I think total earnings does the job, because it takes care of a problem which is known as agency problem. What is agency problem? The management and the shareholders. See, when I work for myself, you know how much I work. You've seen my messages. 1:30 I send the message, come back from Lavasa, whole day standing, 7-8 hours teach, then do that, because there's almost a single guy working for myself, and the only thing is the we crack. We know how to make this big, right? But when I appoint managers, they will want to leave by 5:30. You will become managers, you would want to leave by 6:30 for sure. You know? That will happen. If I'm working, it's a human nature. If you're working for someone else, you would leave at 6:30. Then family is priority, which should be anyways. But when you are working for yourself, the agency problem, it is not that the agency problem is not there, just that my agency problem is one of a small scale. Second is, I can address that agency problem in the morning. So I can get up at 5:30, address that agency problem, and then again go back to sleep. Like yesterday night, I solved some problem, the charts I was showing you. So I slept at 1:30 or something, and then the laptop was on only, the specs was lying side. I got up for 3, at about 3, just looked at the charts and all, felt satisfied and slept. So my agency problem is solved at 3 o'clock in the night. But someone who's working, his agency problem is 5:30 and 6 o'clock. That is a big problem for India, because if you want India to grow at 8% and 10%, and if agency problem, because the West is saying, is feeding into your head that there should be only 4 working days. Why is West bothered about Asia's working culture? Because they want us to slow down. Why is West saying that you should leave home at 5:30 and there should be work-life balance? Are bheek mangoge to where will be work-life balance? If I don't have food to eat, in Mumbai, people travel 2.5 hours one side, go back to the work, and then travel 2.5 hours the other side. The farthest. So if you're traveling, say from Malad or Borivali, these are places, and if you have to go to farthest place in Kalyan, which is the other side of Mumbai, it's a total up and down is 5 hours journey. So the West is feeding into your head that you should work less. It's not possible, because we have had 400 years of slavery. We cannot work slow, we cannot leave early, we cannot leave by 6 o'clock. That's just not possible. And look at how Chinese work. So agency problem is taken care by EPS. I have given you the company, I have given you the BMW, the Audi, the bungalow, the flight. I've given you every facility that you have on the planet. Then let's see how you manage or mismanage the company. I'm just watching you on quarterly reports, weekly reports. I'm not watching you on a daily basis. So the agency problem, when I have you all the facility as a manager of the planet, then are you able to report profit, or are you taking the company down? So agency problem is only and only addressed by EPS. No book talks about it, no professor talks about it, but I am sure somewhere in some corner of this planet, agency problem and EPS have been in, and we have been taught just the reverse of it. Don't look at EPS. I think but stocks are most sensitive to the EPS. That is why this is a very important topic. So you would look at the trend. First thing is, you would look at the trend. Is that clear? Yes or no? Second is, now what they have done is, which is very beautiful, they have also plotted. Earlier it was not available as a plot, so we had to plot it. I had to make my own indicator. This is available as a plot. Look at this one. This is EPS estimate. And what you can do is, you can club these together. It becomes a buy or a sell signal, or a shorting signal. Let me do that to prove it now. So what I am doing is, this is basic EPS, this is EPS estimate. There is a very beautiful this thing, and I can just add signal on strategy. I can move this to the existing pane above. Look at this one. So existing pane above is basic EPS. Okay. Now this gets combined. This they are not teaching anywhere again. So I double click. Now you have just one second. Now you have what? You have two things. One is an estimate plotted, and the second is the actual EPS. If there is a divergence that you are noticing, you know that you need to be careful. That now we shift to the portfolio management class. That could be a time to rebalance your portfolio. Okay, if you are seeing on a continuous basis quarter on quarter, it could be time to trim your portfolio. If it's a negative divergence, the estimate keeps on the actual number keeps on dipping far more than the estimate. It is far more worse than the actual. So you have to trim, or on the other side, if it is posting a positive divergence, your company posts better results than what the analyst had estimated, then maybe it is a time to trim / add. Rebalance could be trim, cut down on the position, or add. So this is a time to rethink when the EPS is working for you, when it's a happy situation on the EPS, and when it is not a happy situation. So what you are essentially bothered about is, EPS growth percentage. There are two matrices on this one. One is of historical nature, and the second is of forward looking. And naturally, you are more bothered about the forward. So if EPS is growing, then it will support your stock prices. The stock prices can keep climbing. You can buy if you have bought an expensive PE stock, which has a high PE. It's an expensive stock on PE. If the EPS keeps growing, the stock will possibly not correct. The stock will just keep on moving. Either if the stock has already climbed up and it is hovering here, if the EPS keeps growing, the stock will not tank. The stock may remain here, or the stock may go up. But if EPS growth slows down, then there is a very high possibility that the stock prices will cool off. This is known as cool off. The best price for the best situation for you, the best time for you to buy the stock is when the EPS has cooled off, you are seeing a reversal, and you have reasons to believe that the management, the corporate governance, the financials are in place. This is just some problem internally or externally which can be sorted out, and then you invest, right? So EPS gives you time to rethink about strategy. In fact, one of the investors, I think, if I'm not mistaken, Bill Ackman, one of the famous investors, I hope it is Bill Ackman, just go and check. He stresses significantly on the EPS. He says this is one of the matrices that you should not ignore. There is a direct relation. He exactly says that. And when I started investigating, I thought, my God, this is so important. और अभी रिसेंटली मैंने वीडियो देखा तो मैं बोला चलो यार, एटलीस्ट मेरी सोच सही है, कोई गलत या सही बोले, बट मेरी सोच सही है क्योंकि ही इज अ बिग गाय एंड आई नो हिज फेस. आई थिंक इज बिग बिल एक्मैन, आई थिंक सो. तो ये जो है ना, ये डाइवर्जेंस की जो मैं बात कर रहा था, दिस इज इंपॉर्टेंट. दिस इज अ नेगेटिव डाइवर्जेंस एंड दिस इज अ पॉजिटिव. समझ गया? So trading view makes it possible. Unfortunately, the books, the certifications have not improved. The books will have to catch up to this level of knowledge. They have not improved. ठीक है, अब इसको मैं थोड़ा बाहर निकालता हूँ. अब आइए, अब जो है बेसिक 1 year ग्रोथ परसेंटेज. दिस इज फॉरवर्ड लुकिंग, इफ आई एम नॉट मिस्टेकन. दिस इज अ फॉरवर्ड लुकिंग बेसिक EPS basic 1 year growth percentage. I think this is forward looking in nature. You can always go and check it out कि ये क्या है about this financial matrix. So this will open up. Okay, so this is historical. This does not solve our. So you need forward looking. Now use the same concept and move to ratio analysis, that is financial statement analysis class. this you will use it for price to earnings divided by EPS growth percentage. But it should be of forward looking, not backward looking. It is not, should not be of trailing nature. Historical, they also call it trailing nature. This is forward looking. So price to earnings divided by EPS growth percentage. If it is less than 1, then it is a company which has EPS growing and it is suitable for investment. So EPS is also used in your ratios. This is known as peg ratios, है ना. ये वो वाला पेग नहीं है जो फ्राइडे को आप लगाते हो. दिस इज अ प्राइस अर्निंग्स टू ग्रोथ रेशियो. समझ गया. अब आप भूलोगे नहीं, है ना. सिर्फ याद रखना है कि पेग जो है नीचे है ना. दिस इज आफ्टर द पेग. ठीक. बट इसमें जी जो है, इट इज नॉट द सेल्स ग्रोथ, इट इज द अर्निंग्स ग्रोथ एंड इट इज ऑफ शुड बी आइडियली ऑफ फॉरवर्ड लुकिंग. समझ गया. सो दिस इज हाउ अर्निंग्स इज कनेक्टेड टू द अर्निंग्स रेशियो. अब आइए इसको पीछे थोड़ा और देखते हैं ना. अब इसको देखिए, ये देख लिया आपने. अब हटाता जाता हूँ विच एवर यू हैव लुक, ताकि स्क्रीन थोड़ी क्लीन हो जाए. तो दिस यू हैव सीन, बेसिक ईपीएस यू हैव सीन, है ना. उसके बाद हमने एक बनाया आपके लिए इंजन. वी सेड स्टॉक रिमेन्स, है ना. ये पीएफए इंस्टीट्यूशनल ईपीएस इंजन है. दिस इज अवेलेबल फ्री ऑफ कॉस्ट and we have given it people to use it. What we have done, I think it's in a private mode, because whenever we upload a public, they remove it for some reason. फिर वो उतना टाइम नहीं होता मेरे पास. Then it takes months to replicate the same thing, because then we have moved forward, है ना. कुछ नया काम आ गया. अब इसमें मैं आपको क्या दिखा रहा हूँ, ये आप देख लो. What I will do is, I don't know whether it is visible or not because of the color. I will just make it black in color. अब थोड़ा बेटर दिख रहा होगा शायद, है ना. बट वहाँ नहीं दिखेगा बेटर, वहाँ शाइन हो रहा है. चलिए ठीक है, दोनों तरीके से दिखा लेते हैं. सो लुक एट दिस वन. सो व्हाट वी हैव डन इज, वी सेड ईपीएस जो है ना, ईपीएस रिमेन्स इन अ जोन. ठीक. सो वी ट्राई टू आइडेंटिफाई द जोन्स इन विच द स्टॉक रिमेन्स. समझे आप. तो इसमें जो है एक दो और तरीके से दिखाऊंगा, आपको समझेगा. सो वी सेड इफ इट इज रिमेनिंग इन अ जोन, आइडेंटिफाई इट. इफ इट रिमेन्स इन अ जोन, आइडेंटिफाई. एक जोन आइडेंटिफाई कीजिए, ये इसका नॉर्मल ईपीएस. अब मैं आपको एक दूसरा स्टॉक दिखाता हूं जो बहुत पॉपुलर है. अगेन नॉट अ बाय और सेल रिकमेंडेशन, उसके एंगल से मत लें आप. ठीक है. ये देखिए, इसमें हमने वही इंडिकेटर रन किया. वी हैव ऑटोमेटेड एंड यू वुड रियलाइज एंड यू विल फील वेरी हैप्पी टू नो कि जैसे ही येलो लाइन आती है, more or less you understand that this is a zone in which the EPS was stuck. Listen to it very carefully what I am saying. This is a zone in which the EPS was stuck. ठीक है. इसको देख लीजिए फिर से, बंद हो जा. हाँ, ये तो कोडिंग दिखा रहा है, ये देखिए. So this is a zone. When you look at this one, you know that this is a zone in this. So we are finding support and resistance levels on EPS. अब ये बड़े मजे की बात. Why this is important? Because people are finding support and resistance here. Whereas you know that the prices are dependent on x-axis factors. So why not find support and resistance levels on the fundamental factor, which can now be plotted with the help of TradingView, that no one is teaching. So if you see, this was the EPS for many years was stuck in this zone. Then it pops up here. So when we are talking about the EPS divergence, the EPS trend, essentially what we are saying is, if the EPS goes up, there is a possibility it will come down. It pops out and comes back. I'll show you one example. है ना? वो example देख लीजिए, then I'll explain this one. So look at this one. I'm trying to explain a very important point, you know, which no one is talking about and no one is trying to explain in this simple language. Look at this one. You know, let me delete something. Look at this one. The problem, what happens is, when you are looking at the EPS, okay, the problem is you see it popping out. This is a common zone. Do you notice? Yes or no? And then it pops out and then it comes back in its zone. So it pops out, people buy this EPS, the stock has already moved up, and when it starts cooling off, the stock sooner or later, maybe in 3 months, 6 months, the stock also cools off. And at this time, you will hear a lot of noise in the market, you know, and people will force you, the noise, the influences will force you to buy that stock. In fact, a good company, according to, these are value investment principles of value investing, which is Warren Buffett and all, you should buy when it is here. You should buy a good company in bad times, not a good company in good times, because it is anyways very expensive. So you should buy a stock which is selling cheap because it is going through some bad phase. Otherwise, good stocks will not sell cheap. So when it has popped out of its zone, so this is a zone in which the EPS traded most of the times, or EPS worked. It popped out and then it fell. Someone who bought here would have bought it here. So they would have got stuck because the stock has declined. Now, that is the main fear, and that is what you observe with other stocks. Now we come back to this one, and what I'm trying to explain you is something known as re-rating of the stock. What is known as re-rating? Ye dekhiye. It was stuck in this zone. Do you agree? Yes or no? And then it moves to this zone and it has not come back. Do you agree? Yes or no? The EPS has shifted to a new zone. Do you agree? Yes or no? This is known as EPS re-rating, or the stock has gotten re-rated. What is the re-rating reason for this one? Let me define this. Let me use the whiteboard so that people who are watching us online, they can also see it with clarity. Have you understood the point? So समझेंगे आप लोग, है ना? Have you understood the point? Yes or no? What could be the reason for this EPS shift permanently? It looks like it is a permanent shift. It was operating in this zone, zone 1, and this is zone 2. जब आप एयरपोर्ट पे जाते हो, when you go to the airport, do they say zone 1 please stand here, zone 2 please stand there, zone 3 please stand? It's a different zone. Okay, so what must have happened? The EPS shifts, the re-rating of the stock happens largely because of these three reasons. One is capex. You were this small company and you became a large company. You set up a new plant. For example, when you order Domino's pizza of this size, maybe the price is 199 rupees. When you order a larger one, maybe medium pan pizza with cheesy burst and with all the all the everything sprinkled upon, maybe it is 599 plus taxes. Why? The size is big. So when you had only one machinery in the plant, the valuation of the company will be small. When you bring in 9 more machineries and the total machinery, the asset base becomes 10, naturally whether it reflects in the prices right now or not, whether it reflects in the stock prices, it will eventually start reflecting, because from one machinery you have gone to the 10 machines. Now the problem, another problem starts, whether you are able to efficiently use the machinery. That's a second problem. Stock market will see that you are getting one machinery, you've got 9 more machineries shipped, it is entering the warehouse, you are installing it, they will start thinking about re-rating the company. So one is the capex part of it. Second is maybe you've done a new product launch, which has happened in case of Maruti Suzuki. The Honorable Prime Minister, he went and inaugurated in December an EV plant. That EV plant is not sold in India. We've not seen WagonR EVs so far. Those are being shipped to Europe. So this is a product expansion with better gross margins and EBITDA margins. Understood my point? It's a re-rating. There was no EV so far. They have already been testing. We have been hearing of it since 2016. Those are known as mule vehicles. If you've seen those are covered vehicles which drive on the roads. These are test, we call it test drive. The correct terminology is mule vehicles. Mule, M-U-L-E, the animal mule. And you take a permission TC number from RTO, etc., etc. So the second is when the product has gone, there is a product launch, and the third is when there is a technology which you have infused. There's a new technological product. In such cases, you would earn better. You are bringing in asset efficiency here. Okay, you are bringing in the better EBITDA margins. What has happened with most of the liquor manufacturing companies and sugar companies, ethanol is giving them better margins. It's a new product which has come. Now they don't want to sell to the, someone was telling me, they don't want to sell the ethanol to distilleries, the wine companies or the processing companies, but they want to sell it to the ethanol. Government buys it. If it is sugar based, then it is 61 rupees liter. If it is multi-grain based or grain based, as not multi-grain, grain based, then it is 71. So you are getting higher margins. One particular case is you would want to look at is Globus Spirits. It is a case study done by Edelweiss, which is now known as Nuvama. There is a presentation from there as to how better margins have led to better ROE, your DuPont analysis. So you are making better margins, the EPS will improve, naturally the stock prices will show up. And the third is you are getting in technology. which is EV is a technology, and it is done at the right time. No one had imagined that Iran war would become such a problem. There was no problem between US and Iran in December when the plant was inaugurated. So you can just imagine how many EVs would have been shipped by Maruti. We don't have an idea. We'll have to look at the number, and that is a thought that comes to my mind as I teach, that it's just a blessing in disguise for those countries which are importing from India the EV. So technology boom. So you have a re-rating only when you know. So look at EPS not as a number, not as a mathematics, as a trend, okay, as a divergence, as support and resistance. Okay, these are the 4 things we have studied, and the last thing, and we'll stop here, is as re-rating of the EPS, which is because of the capital expenditure, the product expansion, or the technological, either one of those or a combination of these three, which is capex, product expansion, and technology, either standalone or an overlapping of it, and that leads to re-rating. If your EPS has increased or is about to increase or is increasing, no one on the planet, not even on the planet, no one in the universe can stop the valuation of your company from going up. Okay, so that we'll stand here, we'll stop here. So I hope you've enjoyed today's lecture. Thank you. Your feedbacks are most welcome, and do pass on your comments in the comment section so we understand whether you liked our video or not. Thank you, and God bless you all, and good night, and we'll see you tomorrow with another concept tomorrow.